In this video, I'm going to be showing you a trend following strategy which you can apply in order to find high probability trades and make more money in your trading. Let's get straight into it. Alright guys, so first of all, before we get into some live examples of the strategy, I just wanted to take you through the actual rules that we're going to be using. So first things first, what we're going to be doing is identifying higher time frame structure on the daily and the 4 hour. We're not going to be going any time frames higher than that. We're just going to be focusing exclusively on the daily and the 4 hour. And then we're simply going to be following the trend. So we're going to be trying to get in on a pullback by identifying areas of imbalanced supply or demand in a premium or a discount of the current trend leg. And I'll show you exactly what that means in a moment. We're going to wait for the lower time frame, and in this case, particularly the 15-minute, to realign with the higher time frame trend. So imagine price is bullish on the higher time frame. On the 15-minute, when the higher time frame is doing a pullback, that will be a 15-minute downtrend. So what we want to see is when price comes into our area of interest, we want to see the 15-minute switch back bullish in line with the higher time frame. And then we're going to go over to the entry pattern. And for this, we basically need to see three things. Once price has switched back in line with the higher time frame trend, we want to observe a break of structure, an imbalanced level of supply and demand that swept previous liquidity, and we want to see liquidity induced in that level. So I'll go over to the charts now and I'll show you exactly what all of this means. And we will start over here like this. So 4 hour time frame, identify higher time frame structure. So in this case, clearly we are bearish. We're printing lower lows and lower highs. And all I mean by identify high time frame structure, we do not need to overcomplicate this. We are simply seeing whether buyers or sellers are in control by first of all identifying the pattern, so the lower highs, the lower lows, higher lows, higher highs, which is the prevailing trend. We can also look to see if demand or supply is in control by looking at whether demand areas or supply areas are being respected. In this case, we have a lower high followed by a lower low, confirmed by this break of structure just here. What I like to do for this strategy as well is draw on where you see the most recent breaks of structure. What I also like to do is mark on where we are respecting the supply or demand. So in this case, we've pulled back into this supply area. If we go to the 1 hour, you can see this area of supply, price respected it, then we broke structure to the downside. So the next step, identify imbalance supply or demand in a premium or a discount. So what I mean by a premium or a discount is if we go up to this blank chart, if price is in a downtrend like this, a premium is basically above 50% of the current trend leg. So if we get the fib tool, we draw it from the low to the high, and all we want to do is see if price can retrace to above the 50%. If we are in an uptrend like this, we are doing the same, but we're waiting for price to retrace into a discount, which would be below the 50%, so anywhere within this region, and then we're simply getting in to follow the trend on a pullback. Simple as that. So if we go back to the live example, in this case we're bearish, therefore we're looking for sells, and we want to identify any premium levels of supply on the higher time frame. So if we draw the fib tool between the low and the high, all we're waiting for price to do is pull back to above the 50% of this line. And then we can go and refine any areas of supply that we see. So in this case, we have this level above the liquidity. This one here, you may say this is a valid level as well. So we can draw that on as well, see which one is respected. If If we go back over to the higher time frame, you can see that this one is kind of just like a liquidity level, so I wouldn't expect it to hold. This one, it was already mitigated, but we only tapped it slightly, so it's still valid. And then we simply wait for price to get into one of those levels. Like so, price tapped into the top level. We can now change the color of that. This brings us to step 3, which is wait for the lower time frame to realign with the higher time frame. So for this, we're going to go over to the 15-minute. I always use the 15-minute, by the way, for this entry, so no need to go any lower than that. And all we're going to be doing, notice how, like we mentioned before and like we identified, the higher time frame is bearish, price is printing lower lows and lower highs. But on the 15-minute, price is bullish. We've printed breaker structure to the upside and a breaker structure to the upside just here as well. We mark that on. So simply, what we're going to be doing is waiting for the 15-minute to break its uptrend and realign with the higher time frame downtrend. And for that to happen, we would want to see a break of this higher low and for price to create that lower low, which we get just there. So that would be our change of character, like that. So now price on the 15-minute time frame is bearish, in line with that higher time frame bearish bias. So what we want to see now is a breaker structure. So if we play price on, let's play it a bit more. There we go. So we have a further break of structure. And by breaker structure, guys, by the way, I mean after we have that initial change of character, we're waiting for price to break structure again and form a lower low. So what we do now is anticipate that price has a high probability of forming a lower high and continuing the downtrend. Going back to our criteria, we want to see an imbalanced level of supply that swept previous liquidity, and we want to see liquidity inducing the level. In this case, what can we see? We have this level of supply which swept all of these wicks to the left, therefore it swept liquidity, and we also have this previous level of liquidity below it. And the reason we can see this is liquidity is because this would be where people were buying, probably on like a fib retracement or something like that. So we simply enter the market when those people are taken out, entering on the candle that swept liquidity, stops just above, and targeting higher time frame trend low. In this strategy as well, since the candle swept liquidity to the left and we have a breaker structure, we can have the stop loss simply just above this level, as when you get areas of supply and demand that sweep liquidity, they nearly always hold, obviously in line with the trend and other things. But you can kind of be sure that if this level breaks, price will probably head back to the high, in which case your analysis would be wrong. So there's no reason to have the stop loss all the way up here. We can just put it above this supply here and watch what happens. Price comes up, rejects the level, can't break past it, and comes to the take profit. I will also show you another example of that now. So if we go back here. So in this example, it's the same thing, but we are now in an uptrend instead. Identifying that 4-hour breaker structure, just there. We want to identify the discount of the trend leg, so from the low to the high. And then we go down and basically identify where our levels of demand are. In this case, we have this level of demand. If we zoom in, you can see that it was imbalanced and induced by this wick. All of these levels above are just liquidity, so I wouldn't look to enter on those. We wait for price to come into the level. And then again, we wait for that lower time frame entry confirmation. So in this case, the most recent 15-minute lower high is this level here. So that's where we need to see price break above before considering buys. So all we do at the moment is wait patiently for price to either break this level or break the trend. So this is why I would set my alerts and just wait. And we need to see a closure above that level as well, by the way. Not a wick above. There we go. So we see a closure above, and we also have a further break of structure. We have an imbalanced level of demand, which swept liquidity to the left and has liquidity above it as well, like this. So all we do now is enter on that level. Stops just below, probably below this wick, and then we would target the higher time frame trend high. And the reason we can do this is because with this strategy we have aligned ourselves with the trend on all time frames. We know that the point where we get in is highly likely to be the most recent higher low, and what follows a higher low is a higher high. So price will probably come and take this high. Obviously not guaranteed to happen, but we have a high probability of that happening. Price tags us in. And hits take profit. Once again, notice how when you get this area of demand which sweeps liquidity and has liquidity above it, price comes in, rejects, and cannot push past it. This happens all the time, and it's why this particular strategy works very well. That's my last example for this strategy. So just to summarize once again, if you guys want, you can screenshot this trading plan and use it, backtest it, test it in the live markets, do as you will with it. But in summary, we identify the higher time frame structure on the daily and the 4 hour. We identify our premium or discount levels of supply and demand. We wait for that lower time frame switch in trend to realign with the higher time frame. And then we simply wait and see if we get the entry pattern, which consists of a break of structure, an imbalanced level of supply and demand with liquidity above it. So simply just following the order flow and following the flow of price. Once we get confirmation that price has switched back bullish from our level of demand, whereas before we were in this downtrend approaching the level. Hopefully you guys found this video valuable, and if you did, make sure to like, subscribe, comment below what videos you want to see in future as well. And thank you for watching. I'll see you in the next video.